Hello friends, subscribers and colleagues, a very warm welcome back to another episode of Readings in Impact Investing. My name is Daniel Rosehill. This is a new podcast and a YouTube channel which I created to take important source material in the world of impact investing, ESG and development finance and replicate it in an audio format so that you can listen to it rather than read it. Today we're going to be doing a pretty quick reading of a fact sheet which the SEC circulated about its proposed climate-related disclosures. Obviously, we had a few very significant regulatory developments in 2023. The year just gone by was S1 and S2 from ISSB, which we just covered. We had California coming out ahead of the federal government with its own rules, which we're going to talk about soon. And we had the spectre of the SEC's proposed climate disclosure regulations looming throughout the year, and ultimately they didn't actually get enacted in 2023. There's still an agenda item that is going on. But at some point, and I'm not sure actually when this fact sheet came out, I have heard a few people mention it, but I'm not sure exactly when, and sometimes it's tricky to find this out. It appears to be 2022 at least that this was drafted, so it's a little bit lagging behind. Or it could be newer than that, but in any event, it's from the SEC itself, and it intends to give some simple background on what the agency, or the commission I should say, is composing. Fact sheet: enhancement and standardization of climate-related disclosures. The Securities and Exchange Commission, SEC, proposed rule amendments that would require a domestic or foreign registrant to include certain climate-related information in its registration statements and its periodic reports, such as in Form 10K, including climate-related risks and their actual or likely material impacts on the registrant's business, strategy and outlook, the registrant's governance of climate-related risks and relevant risk management processes, the registrant's greenhouse gas emissions GHG, which for accelerated and large accelerated filers and with respect to certain emissions would be subject to assurance, certain climate-related financial statement metrics and related disclosures in a note to its audited financial statements, and information about climate-related targets and goals and transition plan, if any. The proposed disclosures are similar to those that many companies already provide based on broadly accepted disclosure frameworks, such as the Taskforce on Climate-Related Financial Disclosures and the Greenhouse Gas Protocol. Background: the Commission began efforts to provide investors with material information about environmental risks facing public companies in the 1970s, and most recently provided related guidance in 2010. Many investors are concerned about the potential impacts of climate-related risks to individual businesses. As a result, investors are seeking more information about the effects of climate-related risks on a company's business to inform their investment decision-making. Investors also have expressed a need for more consistent, comparable and reliable information about how a registrant has addressed climate-related risks when conducting its operations and developing its business strategy and financial plan. The proposed rules are intended to enhance and standardize climate-related disclosures to address these investor needs. Many issuers currently seek to provide this information to meet investor demand, but current disclosure practices are fragmented and inconsistent. The proposed rules would help issuers more effectively and efficiently disclose these risks, which would benefit both investors and issuers. Content of the proposed disclosures. The proposed rules would require a registrant to disclose information about the oversight and governance of climate-related risks by the registrant's board and management, how any climate-related risks identified by the registrant have had or are likely to have a material impact on its business and consolidated financial statements, which may manifest over the short, medium, or long term, how any identified climate-related risks have affected or are likely to affect the registrant's strategy, business model, and outlook, the registrant's processes for identifying, assessing, and managing climate-related risks, and whether any such processes are integrated into the registrant's overall risk management system or processes. If the registrant has adopted a transition plan as part of its climate-related management risk strategy, a description of the plan, including the relevant metrics and targets used to identify and manage any physical and transition risks. If the registrant uses scenario analysis to assess the resilience of its business strategy to climate-related risks, a description of the scenarios used as well as the parameters, assumptions, analytical choices, and projected principal financial impacts. If a registrant uses an internal carbon price, information about that price and how it is set. The impact of climate-related events, severe weather events and other natural conditions, and transition activities on the line items of a registrant's consolidated financial statements, as well as the financial estimates and assumptions under its financial statements. The registrant's direct GHG emissions, those are Scope 1, and indirect GHG emissions from purchased electricity and other forms of energy, those are Scope 2, separately disclosed, expressed both by disaggregated constituent greenhouse gases and in the aggregate and in absolute terms, not including offsets, and in terms of intensity per unit of economic value or production. Indirect emissions from upstream and downstream activities in a registrant's value chain, which are so-called Scope 3 GSG emissions. If material, or if the registrant has set a GHG emissions target or goal that includes Scope 3 emissions, in absolute terms, not including offset, and in terms of intensity. And if the registrant has publicly set climate-related targets or goals, information about the scope of activities and emission included in the target, the defined time horizon by which the target is intended to be achieved, and any interim targets, how the registrant intends to meet its climate-related targets or goals, relevant data to indicate whether the registrant is making progress towards meeting the target or goal, and how such progress is being achieved with updates each fiscal year, and if carbon offsets or renewable energy certificates, RECs, have been used as part of the registrant's plan to achieve climate-related targets or goals, certain information about the carbon offsets or RECs, including the amount of carbon reduction represented by the offsets or the amount of generated renewable energy represented by the RECs. When responding to any of the proposed rules provisions concerning governance, strategy and risk management, a registrant may also disclose information concerning any identified climate-related opportunities. Presentation and attestation of the proposed disclosures. The proposed rules would require a registrant, including a foreign private issuer, to provide the climate-related disclosure in its registration statements and Exchange Act annual reports, for example on Form 10K, provide the Regulation SK mandated climate-related disclosure in a separate, appropriately captioned section of its registration statement or annual report, provide the Regulation SX mandated climate-related financial statement metrics and related disclosure in a note to its consolidated financial statements, electronically tag both narrative and quantitative climate-related disclosures in inline XBRL, and if an accelerated or large accelerated filer, obtain an attestation report from an independent attestation service provider covering at a minimum Scope 1 and 2 emissions disclosure. Phase-in periods and accommodation for the proposed disclosures. The proposed rules would include a phase-in period for all registrants, with the compliance date dependent on the registrant's filler status, and an additional phase-in period for Scope 3 emissions disclosures. See the tables, which I'll read at the end. A phase-in period for the assurance requirement and the level of assurance required for accelerated filers and large accelerated filers, a safe harbour for liability for Scope 3 emissions disclosure, an exemption from the Scope 3 emissions disclosure requirement for smaller reporting companies, and forward-looking statement safe harbours pursuant to the Private Securities Litigation Reform Act to the extent that proposed disclosures would include forward-looking statements. For explanatory purposes, the following tables assume that the proposed rules will be adopted with an effective date in December 2022 and that the filer has a December 31st fiscal year end. And then they give these limited assurance, reasonable assurance, different dates, but those are based on the incorrect assumption that these would have been introduced in 2022, so I don't think it's relevant to include them. But that fact sheet should still remain, although it's been subject to some changes. I thought it would be worth including that anyway. Thanks for listening to another episode of Readings in Impact Investing. This has been Daniel Rosehill here. If you do want to subscribe to this podcast using your favorite chosen podcatcher app, please do so at readingsiниmpact.org. And if you want to get in touch with me, it's public@danielrosehill.com. Thanks very much for listening to today's episode. Wishing everyone a good day, morning, evening, whatever time it is in your part of the world, and looking forward to bringing out more episodes.